Hello, and welcome to the Investing on the Go podcast, brought to you by FundCalibre. I'm Chris Sarley, and today I'm with Dale Nicholls, manager of the elite-rated Fidelity China Special Situations Trust. Thank you for taking the time to speak to us today, Dale.
Thank you, great to be here.
Could I just start by asking, you were based in Tokyo for a number of years at the start of your career. Could you maybe tell us what that was like and why you sort of decided to move to another part of Asia?
Well, that was great. I mean, the Japanese market is a very interesting market. It's, for a long time been the biggest, market in Asia. You've had a lot of great companies come out of Asia. So I started there as an analyst, became a fund manager, looking at basically, running a sort of a broader portfolio, investing, throughout Asia, and increasingly, I saw more and more opportunities in China. And I think there's no question that at some point, China will definitely be the biggest market in Asia. And instead of looking at Asia ex-Japan, we'll probably look at Asia ex-China. And so I just increasingly focused on opportunities in China, and it led to me taking on the China Special Situations Fund.
Okay. You've been based in Hong Kong for the past 6 years. Could you maybe talk us through the sort of advantages of being based so close as opposed to being based here like some other managers?
The greatest advantage is really access to the companies. So I think if you're investing in China, Hong Kong would be the prime location in terms of having access to companies. Any company that is China based, in order to meet their investors, Hong Kong was probably the first port of call. So it's really about access to companies. And this is where our core group of analysts are as well. So it makes sense to be based there, working closely with the analysts and meeting the companies quite often.
Okay. And turning to the sort of investing side of things, you tend to favour small and medium-sized companies in the trust. Could you maybe tell us why that is the case?
Sure. The basic premise is I think pretty simple. As companies, smaller companies are less well covered. If they're less well covered, there's less information. If there's less information, there's more mispricing. And I'm in the business of trying to own the most mispriced companies that are currently mispriced, and hopefully as they grow and get more recognized by the market, that mispricing goes away, and they move to sort of more reasonable valuation. So I think that's just a real area of opportunity. It's not such an easy thing to do. You really need, I think, a significant team to really find these opportunities and really stay focused on making sure that they execute. And that's why we've built up such a core group of analysts in Asia that allow us to really identify these opportunities and stay on top of the companies as they execute over time.
You can also invest up to 10% in unlisted companies at a limit that was increased from 5% a few years ago. Why has it increased, and what do you find so interesting about these companies?
Well, I think it's fair to say it's really a global trend that companies are coming to market later. There's a deeper private market, and so China's really no exception there. In fact, there's a huge amount of entrepreneurial activity that's happening in China in companies that are not listed. So it's great to have the structure that we have in the sense of giving investors greater opportunity to really participate in the Chinese economy overall and having access to that economy. So it just gives us a much greater range of potential investment opportunities.
Okay. You also invest in companies that are listed in other countries outside of China, sometimes quite large amounts of the portfolio. Why do you like this flexibility, and why would you hold such large amounts, and what type of company would that generally be?
To be honest, the process doesn't change, but the fact is there's just a lot of companies outside of the Chinese markets which have really significant Chinese exposure. There's companies, some of the companies who are investing in areas like Taiwan, even in Australia, that the majority of their business is coming from China. And a lot of them are just really attractively valued relative to their growth prospects, which I think, as a Chinese-focused manager, that maybe we have, better insight into those prospects. And so, it really makes sense to invest in those opportunities. But our approach is the same. The investment lens we look through to evaluate the companies is the same. We just really want to spread our net as wide as possible in finding these opportunities.
Could you give us an example of a company or a sector where you invest outside of China?
Sure. So there's quite a few interesting names, I think, in Taiwan. An example of a company that I've invested in for some time is called Lease. Not surprisingly, a leasing company focused on small to mid-sized companies, which is kind of a specialized market. It's less competitive. They have a very strong record of managing credit risk, and they continue to do that, and still growing the business strongly. Many of the financial markets in China are at a very early stage. They're not so sophisticated. So someone like Lease, has been able to develop a very strong business there and continues to grow nicely.
Investing in lots of different types of shares. So you've got A shares, B shares, H shares, red chips. How do you go about sort of picking a particular type of share from a company, and do you compare them for each business?
It's again, the approach is very much the same. We want our process to be the same. The way we evaluate companies to be the same as well. And again, it's just really about finding the best opportunities across all share classes. We've been focused on the A share market for quite a while. Obviously, it's becoming more topical now with the A shares coming more into the indices. But for us, it's been an area that we've always focused on. And again, our approach is the same.
That's great. Thank you very much for your time, Dale.
Thank you.
Please remember, we've been discussing individual stocks to bring investing to life for you. It's not a recommendation to buy or sell. The fund may or may not still hold these stocks at your time of listening.